Mr. Sethi, a very good morning and great to have you here on NDTV Profit. Always a pleasure to speak with you. And, we're catching up at a time when Q1 has not been superb for the entire space, and elections, etc., could be some of those reasons. What is Q2 looking like? Let's start with a bit of a temperature check.
Good morning. Q1 wasn't great because we got spoiled by the increases that we saw in the previous quarters. But having said that, Chalet's Q1 growth on revenue side was 17% compared to the similar quarter last year. And we doubled our profit before tax. So clearly, by no means muted growth. It was a strong growth. Q2, we had given in our earnings call an indication that July looks better than June did. And I think that got executed that way. We are not at liberty to speak about numbers of Q2. But clearly, it's only upwards from here onwards.
In terms of your outlook that you've already talked about, so you're increasing keys by 28% by FY27, all of that is on track?
Yes, in fact, it's probably better than that now. We recently announced the acquisition of a land parcel in Goa, in South Goa, in Varka. It's a beachfront property. That'll add another 170 rooms to the pipeline that we have. So our pipeline now has gone up to about a little over 1,000 rooms, and we operate currently around 3,050 rooms. So between pipeline and operation, we're already in excess of 4,000 rooms now.
Let's talk about the outlook on revenue per room. Summer season is behind us. Global travel has picked up. Do you still expect average revenue per room to continue to go up, even though the base is much higher now than it was maybe 2 years ago, post-pandemic?
You're right. The base is significantly higher than what it was a couple of years back. But, double-digit RevPAR growth or total revenue growth is pretty much on the cards, given that there's a massive gap on the demand and supply, favoring demand. And I don't know whether you're familiar with the numbers, but I'm happy to share some of them on that front. Pan-India, till 2027, demand's expected to outstrip supply by roughly around 260 bips. But that's Pan-India. When you look at the cities that we operate in, the bigger cities, the gap's much larger. And within those bigger cities, if you isolate the segment that we operate in, which is largely the upper upscale and the luxury segment, the gap's significantly higher. So overall outlook, because or on the back of the favorable demand and supply arbitrage, we expect the industry to do very well and Chalet to be one of the leaders in that front.
Sanjay, good morning. Neeraj here.
Morning, Neeraj.
Couple of questions. One is this whole expectation of growth in the second half on two counts. Every note speaks about growth in the foreign tourist arrivals. I'm wondering, why is that considered to be a near certainty? And two, somebody was telling me about how the number of wedding dates go up exponentially once the good period starts until May. Do you benefit out of that as well? So both of these, just trying to gauge what demand could be.
Neeraj, I'll speak about the wedding part first. Wedding is a big part of our segment, especially in our two very large hotels in Mumbai, the JW Marriott at the airport at Sahar and the Westin at Powai. Both of them are large hotels with large banqueting facilities and lawns. So we tend to gain when weddings are good. And weddings, as you rightly mentioned, are significantly higher in the second half of the year. On the foreigners front, despite whatever is happening in the global space in terms of the geopolitical activity, Q1, we saw a 30% jump on foreigners coming into or staying with us at Chalet Hotels compared to Q1 of the previous year. So clearly that's on the upside. And the true season for foreign travel actually begins from October. We are eager to see how that pans out. A lot depends on the amount of seats that airlines create connecting some of these destinations. And that's improved a little bit, but we expect major improvements to come in the next 2 or 3 quarters.
Okay. So the other thing is, so therefore, we've had a year of the World Cups and and India being the country which hosted a lot of global countries as well, part one. Now we're seeing a very active festive season. The bases move up consistently. You still reckon that the medium-term trajectory could be of a 10 to 15% growth CAGR for the industry at large?
I don't want to put a number to it, but I think we are comfortably in the 10% CAGR on revenues, I guess.
But the numbers may be better as the ARRs, etc., improve and the F&B revenues improve, and therefore EBITDA could be more than 10% as well?
EBITDA growth should be more than 10% because all of us have learned to keep a tight leash on the costs, and I think that's sort of paying off very helpfully over the last few quarters. We expect that to continue for the next few years.
Mr. Sethi, just a little more detail on two things in the pipeline right now, Goa and of course Duke's Resort. You talked about it briefly. Just give us a sense of completion of timeline of the Goa property, and is the rest of this financial year a larger focus on leisure?
So, it's like this. Goa's land that we just acquired. It comes with majority of the approvals already in place as part of the deal. So we should be off the ground fairly quickly, say a quarter or two. But it'll take about 2.5 to 3 years to build it out of that. Duke's has been under renovation and expansion for the last 3 quarters. We've opened a very small inventory in the recent weeks. And we expect that by end of December, we'll have the full resort up and going, and will be relaunched as upper upscale / luxury wellness resort. And we see a lot of good coming off that as far as the leisure portfolio is concerned. But then in addition to that, we are adding 130 additional rooms in Bangalore, which will also be ready by December or January this financial year. We are also working on the Delhi hotel, which is roughly 390 rooms. We expect to open that sometime in last quarter of FY26. And then we've got the Hyatt Regency in Navi Mumbai, which will be starting work on immediately after the monsoons. And we expect to add about 280 rooms there, which will take about 2.5 years from now to complete. So all of that is on track. Overall, as I said, 1,030 odd rooms, which are already in the pipeline. But our BD team continues to be very active to look for additional opportunities. And as and when we close some of them, we'll come back to you.
Mr. Sethi, it's another quick question, and I want to move away from hospitality, talk about commercial for a minute. How is that space playing out? Are you anticipating significant growth coming from there? And you also mentioned that you are on an aggressive spree, right? When opportunities show up, you go pick them up. How do you plan to monitor? How do you plan to do this? Any plans to monetize your real estate land bank?
So there are two questions there. One, we see the real estate leasing doing extremely well in the right locations. And Bangalore and Powai, Mumbai, where we opened the 2 new assets, we see significant traction on that front. We've got another little short of 1 million square foot that is under construction now at Powai, which will take our total real estate portfolio to about 3.3 million square feet. And we believe that that will be the backbone for continuity to counter the cyclicality of hospitality business. So that annuity business gives us a lot of comfort going forward to counter any cycles going forward. On the growth path, we did a QIP a few months back. We raised a significant amount of money, and we I think, have the gunpowder dry for some serious growth opportunities going forward.
Any hints on in which direction that gunpowder will be utilized, Mr. Sethi?
A good journal will never disclose which way the gunpowder is heading to. But yeah, look, it's going to be as per our strategy that we've declared. We'd like to grow the portfolio in leisure to maybe about 20% of the portfolio. In addition to that, we like the big box, big city hotels, so we'll continue to do more of that. And I've already spoken about the office assets, which will be roughly 25% of the total P&L.
Right. Thank you so much. Always a pleasure. We're speaking about Chalet Hotels this morning.